the live YouTube live stream. It should be up any moment now. Welcome everybody. Hello everyone. My name is Kavya Rizal from Insight Pact. I will be here today making sure that we are now preparing for the live YouTube live stream. On that. That means that the live stream is now working. So I will be making sure that your experience with Zoom runs smoothly today. Welcome to today's webinar. As you can see, we are at ensuring a sustainable recovery, what role for the finance sector. We are all very excited to be here and to have all the attendees here. We will be starting shortly. Just a few public announcements. The chat has been disabled for all attendees. So if you have any questions for the panelists, please use the Q&A section. The Q&A button you will be able to see towards the bottom of your screen. It is called Q&A. You'll be able to ask panelists questions through there. Feel free to specify who you want to ask the question to. Our moderator today, Yuki, will be trying to consolidate all the questions and relaying that to the panelists. Again, thank you very much for joining us today. You are at Ensuring a Sustainable Recovery, what role for the finance sector? As I see there's new attendees joining in, I'm going to repeat my public announcement that the chat section is disabled for attendees for this event. So if you have any questions for our panelists, please send in your questions through the Q&A section. You'll be able to find the Q&A section in the Q&A button towards the bottom of your screen. We will start shortly. Great. Now I hand it over to Marit to kick us off for the event. Off to you, Marit.
Thank you. I would like. Okay.
Just going to step in here. Yuki, perhaps you can turn off your audio completely.
Yeah.
Great. Okay.
So, welcome all participants. On behalf of the organizers, ESCAP and the UNEP Finance Initiative, I would just like to welcome all to this session on ensuring sustainable recovery, what role of the finance sector. We're thrilled to have with us a number of very interesting speakers. But first, I would like to introduce the moderator, Ms. Yuki Yasui, who is heading the UNEP Finance Initiative operations in Asia Pacific. Yuki, pleased to hand it over to you.
Thank you, Marit, and good morning, good afternoon, everyone. Thank you for joining this session on ensuring a sustainable recovery. As introduced, my name is Yuki and I am from UNEP. Just a quick run through of what you can expect on this session. The session structure is as follows. I will do a quick welcome and setting the scene. And then there will be a keynote speech from Dr. Marjun from the Tsinghua University, followed by roundtable discussions with Q&A. So just a very quick context setting before we get into the discussions and speeches. So why do we need an inclusive, sustainable recovery after COVID? First, I think the climate change and the biodiversity loss is the biggest concern. It remains an urgent existential threat to humankind. We've had a drop in CO2 temporarily during the lockdown, but everything that we have been doing so far has been too slow and too little, and we do need to achieve a net zero emission by 2050 for our survival. Second, you probably have noticed wherever you have been that your air is cleaner, your skies are bluer during the pandemic and the lockdown. And air pollution is another pandemic that we need to worry about. 7 million people are dying prematurely per year globally because of air pollution. So this needs to be tackled as much as COVID. And then as everyone has seen on television, the Black Lives Matter movement has really sparked a renewed interest and concern about racism and social inequalities. And I think businesses and economies, communities really need to think about what their business is for, and this discussion on repurposing business is starting to already happen even before the death of George Floyd. So repurposing business, in August last year, the American Business Roundtable redefined its purpose of a corporation from that which is for first and foremost for shareholders to that which serves everyone, all stakeholders, all Americans. After that, in September last year, UNEP FI launched the Principles for Responsible Banking, which also aligns banks that are committed to these principles to align themselves with societal goals and planetary concerns. And then recently in May, so last month, Danone, the French dairy company, has issued its announcement that for its annual general meeting, they will be redefining their purpose of business so that it is value creation for all stakeholders. So in terms of what building back better means and the role of financial institutions, I'd like to just put out 3 key pillars for discussion today. First is a green economic recovery. So that would mean not just about supporting the growth of green sectors, but also helping some of the brown sectors into a green transition. And what the bank's roles, what the investors' roles, what are the insurance roles in doing this. Then it has to also be inclusive, and the financial inclusion and the SME financing in particular are another area of concern for the financial institutions. Lastly, it is an operational concern. We have seen that we can work quite efficiently under lockdown through virtual meetings like this and through remote working. So how can we go back to work, keeping some of the experiences and knowledge learned from doing things virtually, and to make sure that we align our back to work strategy with climate change targets. So how do you bring down the business travel? How do you introduce more remote working on a continuous basis? So with further ado, I'd like to introduce Dr. Marjun, who is our keynote speaker. I'm very happy that he has given his time for this session. Dr. Marjun, I call him the father of China's sustainable finance, which basically means that he's also been the leader of sustainable finance globally for the last 6 to 7 years. So he's currently the Director of Research Center for Green Finance Development at Tsinghua University and the Chairman of the Green Finance Committee of China Society of Finance Banking. In the context of UNEP, he is also the Special Advisor of UNEP and UNEP Finance Initiative's Global Steering Committee member. So with this introduction, I'd be very happy if Dr. Marjun can make his keynote speech. Thank you.
Thank you very much, Yuki. Can you hear me okay? Great. Thank you, and good morning, good afternoon, everyone. It's my great honor to be invited to speak to this distinguished audience on the topic of sustainable and green recovery. Last few weeks, we've been talking about this topic in China, in Asia, quite a lot, largely because of two reasons. One is many countries are putting out massive stimulus packages, which will involve large fiscal budget and also a lot of monetary stimulus. And this is unprecedented. For example, in China, the fiscal deficit GDP ratio, broadly defined, is going to be something like 8% of GDP. And in the US and Germany, we think the number is even higher. Also, monetary authorities are relaxing their monetary instruments, and liquidity is now abundant. So the fiscal money and the monetary expansion will enable a lot of new investments in the coming few years. And we need to see this opportunity to make sure that the new investments made in this round of stimulus package is green, or at least greener, much greener than ever before. The second reason that we feel an urgency for taking action to ensure green recovery is that for many of the investment projects, especially infrastructure projects, their carbon footprint and environmental footprint are being locked in for the next few decades during the design stage of the project, which means that in the coming 1 to 3 years, we have to make sure that these projects are green and low carbon. Otherwise, we have to spend a lot of money in the coming few decades to fix the environmental negative impact and also carbon emission. That's why we have to focus on a few major players in this process of green recovery, namely the governments, the central banks and financial regulators, and of course, which is today's topic, the financial institutions. Now, let me cover these three areas briefly in terms of what the governments should do, what the financial regulators should do, and what financial institutions should do to ensure a greener recovery. At the government level, we feel strongly that the stimulus package, especially investment-related spending, needs to be much greener than before. For China specifically, we have taxonomy for green and sustainable finance. So those who meet the green taxonomy as a percentage of total fiscal package, it needs to be a higher percentage number than in the history. In the past, we had something like 10% of projects being green, according to a local taxonomy. And we're hoping that the new package will involve something like 20% of green projects. The second thing is that a lot of government spending are related to consumption because they are giving consumer coupons and subsidies for the individuals to spend. And we need to make sure that such consumer spending is also green. That's why we're proposing that the government or governments at the central and local level come up with a wide list of green consumer goods and services. For example, electric vehicles, energy efficient refrigerators, energy efficient air conditioners, and recycled papers. These are the type of goods and services that needs to be on the white list for the government to subsidize or to spend on using consumer coupon. The third thing is that the government spending needs to be transparent so that the whole society can watch how green the new spending is. This used to be a requirement, or at least a requirement they were pushing for the financial sector, but we also feel that the government needs to be transparent on the color of its budget spending in terms of whether they're spending on green or spending on brown. And finally, the governments are encouraged to issue more green bonds. A lot of local governments are issuing bonds to finance green projects anyway, but they don't label them as green bonds. The fact that they choose to label these bonds as green bonds can inspire the private sector to follow suit and increase transparency on the environmental impact of the projects. Now, let me say a few words on what the central banks and the financial regulators should do. Financial regulators would include banking regulator, security regulator, insurance regulator, and so on and so forth. The first idea is that a lot of countries are doing green QE. The central banks are buying bonds. So why not buying more green bonds so that they can stimulate the green bond market? And the second thing is on taxonomy. We all know that the green finance agenda requires a clear and consistent taxonomy. And if you rely on the private sector to come up with a consensus on taxonomy, it will take a very, very long time. So the regulators have the responsibility to develop and promote taxonomy for green and sustainable finance. Currently in China, we have 3 sets of taxonomy for green loans and green bonds and green projects. And EU has come up with a taxonomy for sustainable finance. And China and EU have agreed to create a joint working group to look into the possibility of harmonizing Chinese and European sustainable finance standards. And in many other countries, I think they also need green taxonomy, which is the responsibility of the financial regulator. The third thing for the regulator to do is to put out more implementable environmental and climate information disclosure requirements. We increasingly feel that disclosure needs to become semi-mandatory or even mandatory in order to increase its teeth and enhance the quality and the comparability of the data. A lot of countries and regions are beginning to move in that direction. For example, Hong Kong last year announced a mandatory ESG reporting requirement. And in China, we're expecting the regulator to come up with a mandatory requirement for all listed companies and all bond issuers to mandatorily report the environmental information by the end of this year. Finally, regulators should consider certain incentives for green and sustainable finance. In France, there's a bank which is called Natixis. They have done a change in risk weights for green and brown assets. This is done on a voluntary basis without regulatory intervention. But I think the regulators, especially banking regulators, will have to consider to lift that to a regulatory level so that incentive will be built in to the system to lower the funding cost of green and low carbon assets and increase the funding cost of brown and polluting assets. Now, finally, just a few words on what the financial sector, especially financial institutions, should do to push for a green and a sustainable recovery. One is that the market players should push the government and push the central bank, push the security regulator for better policy environment for green finance. A lot of countries, they listen to the private sector players, and private sector should voice their demand for developing taxonomy, for disclosure requirements, and for incentive, so that government will react. The second thing is that the financial institutions should implement probably more aggressively the responsible principles for various green and sustainable financial activities, including the responsible banking principle that's initiated by UNEP, and also the green investment principles for the Belt and Road, which was launched by China Green Finance Committee and City of London for companies and financial firms investing in the Belt and Road region. The third thing to do is to be innovative on green financial products. A lot of barriers exist within the financial system that disabled finance to flow from financial institutions to the green projects that need finance. That's why innovations in the form of, for example, securitization of green assets and green insurance to enable green companies to obtain low-cost financing are all needed. And the third idea for financial institutions is that they should look into the adoption of environmental risk analysis. This may be a new concept for many financial firms, but The NGFS, which is the Central Bank Network for Green Finance, is now promoting this concept. I am the chair of the supervision workstream of NGFS, and I'm leading the work on editing 2 documents to be published by July this year. One is called Overview of Environmental Risk Analysis, and the other one is called Occasional Paper on Environmental Risk Analysis Methodologies. These 2 documents will introduce the existing tools and methods for financial firms, including banks, asset managers, insurance companies, to analyze and quantify the financial risks arising from environmental and climate exposure. For example, these tools will enable a bank to estimate how much non-performing loan ratio will be in 10 years' time if you are lending to a coal-fired power company. We estimated in one case study that loans to coal-fired power company may turn into a very risky financial assets because its NPL ratio or potential default rate could go up to 20% by 2030. So these are type of analysis that should be adopted and used by a much larger number of financial firms so that they can convince themselves to shift away from brown assets and move quickly towards green assets. And final point for financial institutions is the need to adopt digital technologies to green and sustainable finance, because green and sustainable finance face a lot of technical barriers, including the labeling of green assets, the verification of green credentials, and monitoring of green performance of the companies or the borrowers. Such operations, if done only by human, it's going to be very costly or even not possible. That's why digital technologies will be critical in lowering the cost of such operation and enable green finance to become more competitive relative to traditional finance. I think I've taken up all my 10 minutes. Once again, I'd like to thank the organizer for inviting me to attend this forum, and I wish the forum a great success.
Thank you, Dr. Margin. Maybe, so thank you very much for this really covering a lot of things in just 10 minutes. It's amazing how much you've managed to cover. I think what struck me as very interesting is about the power of engagement with policymakers and the financial institutions, that you say that that policymakers do listen, and that the banks and the insurance companies, investors should engage with their policymakers more. The other one is about the forward-looking environmental and social risk assessment. I think this is definitely a new trend. So a lot of the risk assessment and due diligence in the past has been looking backwards. And now there are many methodologies that are, especially around climate change, and then hopefully soon much more on biodiversity issues, that we will be able to measure risks using science-based information and forward-looking scenarios. Maybe if you have just a few minutes just to quickly elaborate a little bit on what you touched upon, which is the green investment principles that are applied to the Belt and Road. So I guess China has now quite a high, one of the highest standards on sustainable finance globally, but that is currently only applied to Chinese banks in China. And I think the green investment principles that you've been developing with the UK partners has been instrumental in addressing the gap on how FDIs should also be at using the highest international standards. So if you can just touch a little bit on the green investment principles and the Belt and Road after the COVID crisis. Thank you.
Yeah, thank you very much, Yuki. Let me just say a few words on the GIP, or Green Investment Principles for the Belt and Road. This set of principles were launched by China Green Finance Committee and City of London in 2018. And as of now, 37 large institutions have joined the GIP as signatories. They come from 14 countries and regions, including all major banks from China and the big banks from UK, Germany, France, Switzerland, and a lot of institutions from Hong Kong, Singapore, and emerging markets such as Pakistan, Mongolia, Kazakhstan, Thailand, Emirates, and so on. We're still expanding, and we're welcoming more financial institutions and real sector green companies to join the GIP. So far, we created 3 working groups under GIP for implementation of the principles. One working group is developing tools for analyzing environmental impact. For example, later part of this year, we'll come up with a carbon calculator to be made for free to all our members to calculate the carbon emission of their proposed projects. And we will later on develop tools for other environmental implications measurement, for example, air pollution, water pollution, land contamination, biodiversity impact, and so on. These should all become part of the tools, which will be made much more friendly than the traditional scientist models. And the second working group is looking at the transparency of their operation in terms of environmental impact. We have developed templates for members to disclose the environmental information, and we'll report some of that in the annual report of GIP later this year. And the third working group is developing innovative green financial products, especially blended finance, so that we can help members to lower their funding cost using some soft money from MDBs and so on. We are thinking about developing local chapters of the GIP because currently GIP is operating from China and the UK, where financial institutions are concentrated, but we need more local participation from the Belt and Road region. That's why we're now exploring ideas on developing local chapters in Central Asia, in ASEAN countries, in Africa. And we're actually looking forward to more suggestions, including from this audience, on how to expand the influence and disseminate the best tools and methodologies and principles of green finance to these regions through the GIP network.
Okay, thank you very much, Dr. Marjan. Thank you for your time. And we will say goodbye to you at this point. Thank you.
Bye.
Goodbye. Thank you very much. So we are now going to go into the next part of the agenda. Let me share my screen with you. We are going into the roundtable discussion, and I'm very pleased to introduce 4 panelists today. Let me introduce them in the order that they will be making their first intervention. So first is Dr. Helena Wright, who is the Vice President at WWF Singapore. WWF Singapore is the leading institution on promoting and developing sustainable finance, especially in ASEAN and in the Asia Pacific region. At WWF Singapore and in WWF's global network, Helena focuses on sustainable infrastructure and energy finance. Next will be Mr. James Robertson, Head of Asia, ex-China and Japan at the PRI, the Principles for Responsible Investment. James is based in Hong Kong, and he joined the PRI in 2015 through ASRIA, through the merger of ASRIA, which is the Association for Sustainable and Responsible Investment in Asia, into the PRI. ASRIA was one of the first ESG industry associations in Asia. And then we have Dr. Srikanya Yatip, Deputy Secretary General of the Government Pension Fund of Thailand. The Government Pension Fund, or GPF, is a key driver of ESG investment in Thailand. So ESG is environmental and social governance issues are considered into the investment practices. So GPF has joined the principles, the PRI, the Principles for Responsible Investment, in 2019, and is in the process of applying the ESG screening in all domestic equity investments. And then last but not least by any means is Ms. Luan Si, Head of Group Sustainability at CIMB Group in Malaysia. So Luan has been instrumental in transforming CIMB into a leading sustainable finance and responsible bank in Asia. CIMB was one of the 30 banks that led the development of the principles for responsible banking. And it's really amazing how much CIMB has been able to make progress on sustainability in a matter of 2 years under Luan's leadership. So before I pass the mic to Helena, who's our first speaker, just a very quick Q&A protocol for the attendees. So please use the Q&A function, and you can put in your questions anonymously, although we do encourage to include your name. Please do direct any questions specific to any panelist or keep it open. And we will only be showing the answered questions, so don't worry if you don't see your questions posted. It's just because it hasn't been answered yet. And depending on the volume of the questions we get, we may not be able to answer all. So with that, I'd like to pass the floor to Helena, please.
Oh, hi, my name is Helena Wright and I'm a Vice President at WWF Singapore. And I'm just going to briefly share a few slides on the topic of sustainable finance opportunities and challenges post-COVID-19. Looks like the formatting of the slides might have gone a bit wrong. Is it possible for me to share my screen or? Okay, not to worry. I'll just present these as they are. I'll just present the slides as they are. So I'm just going to share a few points about sustainable finance opportunities and challenges post COVID-19. And WWF has brought out some research on the sustainable banking regulations in the Southeast Asia region, which are increasing over time. And we did an assessment last year. That assessment will also be updated this year with a new report showing that many of the regional financial regulators are bringing out sustainable finance regulations. If you just turn to the next slide. Next slide, please. And as you can see from this slide, the Singapore banks are actually in line with the international banks. Sorry, it's jumped ahead one slide, please. The Singaporean banks are in line with the international banks in terms of sustainable finance broadly, and the other banks are basically increasing their ESG integration over time. And as you can see from this chart, last year, all the main Singaporean banks prohibited the financing of new coal-fired power plants and also required clients to integrate no deforestation commitments. If you turn to the next slide. As you can see here as well, many of the banks are integrating areas such as climate risk assessment and also integrating sustainability related KPIs for staff appraisal as well. There are some areas that are sort of lagging behind compared to best practice. For instance, developing climate strategies at the different banks and also integrating ESG criteria in the board terms of reference. Turn to the next slide, please. I'm just going to briefly touch on the challenges and opportunities after the COVID-19 crisis. Next slide, please. And I would just like to highlight a few aspects which have come up recently, which is one, that the crisis has put a spotlight on the links between nature loss and financial risk. And COVID-19 can be seen as an example of a systemic risk linked to nature loss. For example, global trends such as climate change, deforestation, for example, which are actually increasing the risk of pandemics. You turn to the next slide, please. And there is a challenge here, which is the temptation to weaken ESG safeguards. This needs to be avoided in order to reduce the potential for a kind of negative spiral of increased risks, as we know that if ESG safeguards are weakened, that could embed more systemic risk in the economy overall. And there are some opportunities as well for banks' leadership. We can see a few examples from this region. For example, Korea's Kookmin Bank recently raised $500 million from a COVID-19 sustainability response bond. So there are some examples here, for example, where green bonds can be used to display leadership and respond to the pandemic crisis. Next slide, please. There are also, as mentioned by Dr. Marjun, a number of different stimulus packages being developed in the region, and a lot of increased pressure we're seeing for the Build Back Better agenda. And you can see, for example, some examples in this slide from Canada, which has linked the bailout to disclosure against the Task Force for Climate-Related Financial Disclosures. And you can see this is part of a growing trend and trajectory of increased pressure for environmental disclosure. Next slide, please. And sustainable products have also been outperforming during the crisis, and this has implications for commercial banks as well. It may show that the companies which incorporate ESG may be more resilient. Also provides weight to the argument that banks should use ESG criteria in order to screen clients. For example, BlackRock recently brought out a report noting that sustainability metrics are often viewed as a proxy for operational excellence. Next slide, please. And there's also been a drop in the price of oil. This highlights the risks with investing in fossil fuels, for example, the commodity price volatility.
So Helena's video and audio is frozen. We've turned Helena's video off to see.
Can you hear me okay?
Yes. We'll keep
Sorry
your
about
video
that.
closed for now to see.
I'll just continue and hope that you can hear me okay.
Yeah.
If you'd like to turn to the next slide, please. Can you hear me? Next slide, please.
Helena, we are seeing the job creation slide at the moment. Is there another slide after this?
There seems to be, it's probably on my end, there's a frozen slide. Apologies for that. Yeah, I'd just like to touch on the job creation opportunities of clean energy investment, and also the profitability of these investments, both from a social perspective in terms of job creation, but also from a financial perspective. And these could mean that there are opportunities really for banks during this period to invest in areas such as clean energy in order to support a more resilient and a greener recovery. Thanks a lot, and happy to answer any questions.
Yeah, thank you, Helena. One question that has come up is about the coal policy. So do you think, so you said that the Singaporean banks have all introduced no new coal financing. Do you think that trend will spread in Asia, ASEAN banks after the COVID crisis, or with the
Yes,
COVID crisis?
I believe that trend will increase actually, because we're seeing that a lot of coal projects are also risky from a financial perspective as well as from an environmental perspective. And we're seeing a big withdrawal of companies from the coal sector, particularly financial institutions. It seems more than 100 financial institutions have already introduced some kind of exclusion on coal. So we probably will see that trend increasing. And you can also note that in Japan, for example, just in the past couple of months, the top 3 banks from Japan have all announced that they're not to be funding new coal projects. So we may see other announcements in due course.
Yeah, thank you, Helena. If you can stay on, and we will move now to James from the PRI to give the perspective of the industry, the investment industry, what the state of responsible investment in Asia was before COVID, and how and why building back better is good for investors. Thank you, James.
My pleasure, Yuki, and thank you so much for inviting me to participate in this excellent forum. Very briefly, just for those who aren't aware, the PRI, or the UN-supported Principles for Responsible Investment, is a mission-driven global collaborative investor initiative and the world's leading proponent of responsible investment. So our members, or our signatories, commit to 6 principles which are focused around the development and implementation of a structured approach to the incorporation of ESG issues into their investment and ownership decisions. Now, with respect to Asia and Southeast Asia in particular, I think it's fair to say that we are still in the very early stages in terms of responsible investment development, with a lot of the work being done in the last few years really focusing on building awareness, the capacity around RI concepts and practices, and combating a lot of the misconceptions that have existed around this approach within the region. And this has been done not only by the PRI, but by a wide range of partners and stakeholders, the UNEP FI being one of them, WWF, another that we work closely with as well. So certainly a collaborative effort in this regard. But there's 3 trends that maybe I'll touch on briefly, and we have heard them referenced slightly by Dr. Majun and Helena already. The first has been that, particularly in the last 2 to 3 years, there's been a drastic uptake in interest and engagement around responsible investment. So this has been, as I mentioned, a growing recognition in the value of responsible investment approaches, the need to develop a more structured approach which incorporates these risks and opportunities, and a deeper understanding on the potential materiality these can play. So while there isn't data available on the asset flows into RI strategies for the region, a reasonable proxy can be, in terms of commitment and leadership, looking at the number of PRI signatories we've had join us. And from the end of 2016 through to the end of 2019, we saw a growth from 227 to 401 signatories in APAC. And particularly encouragingly in China, we saw a growth from 4 to 35 signatories in that period. In Asia, ex-China and Japan that I cover, we saw a growth from 36 to 96 signatories, and we're now well over 100. And so we've been seeing really encouraging growth and interest from Singapore, Hong Kong, Malaysia, Thailand, obviously China, Korea, and a number of other countries. And we expect this to increase and to accelerate going forward. Secondly, we're starting to see, and what is critically important, is leadership from key asset owners in the region. Being at the head of the investment chain, asset owners can set that direction of markets while also having a huge influence in how they select, appoint, and monitor external managers and champion ESG incorporation throughout organizations. So in Southeast Asia, we've seen leadership emerge in Malaysia from the Employees Provident Fund, Co-op Retirement Fund, and Khazanah. In Thailand, obviously GPS Thailand. I won't speak too much to them, but I'm delighted we've got Dr. Shrikanya sharing later in the session on their work. And obviously in Singapore, we're starting to see Temasek and GIC really focus on this, though perhaps they've been less visible in the past. Across the rest of Asia, Hong Kong Monetary Authority have been very forward-looking in announcing key measures, and in Korea, the NPS have announced an action plan for an enhanced RI. So as these leaders emerge, it provides that encouragement and puts pressure on their peers to step up, but it also provides examples of good practice that others in the region can learn from and obviously look to implement in their own organizations. The last trend here, and the one that Helena already touched on, is that we've seen a drastic increase in sustainable finance policy. So a recognition from regulators around the importance and growing urgency of sustainability issues. Very much a 21st century phenomenon. And in Southeast Asia, although this has been happening more sporadically, this has really been picking up pace. And so these can fall into certain maybe subcategories. We've seen national sustainable finance strategies emerge. So in Malaysia and in Singapore, we've seen a Green Finance Action Plan and SRI roadmap announced. We've also seen the proliferation of stewardship codes. So these have been national level, sometimes regulator supported, sometimes industry driven, which have focused around developing stronger active ownership and stewardship practices. And we've been seeing them, from Japan and the UK taking the lead to Korea, Singapore, Malaysia, and a number of countries. And lastly, corporate disclosure requirements have really been an issue where we've seen stock exchanges stepping up in terms of the commitment and the requirements they have in place, as well as the support that they have in place for listed issuers to start understanding how and what investors are looking at and what they need to report on. So those are the trends, what we've seen in the past. And obviously, we really hope that momentum will continue. But obviously, we're very early days in terms of looking at COVID and how the recovery will take place. And I'm encouraged that a lot of the response we are seeing from our members aligns with what Dr. Majun has mentioned and what we're seeing on the banking side as well. So COVID is one of the clearest examples that without healthy people and a healthy planet, there can be no healthy economy. We really need to recognize that people, profit, and planet are all interconnected. And so how the recovery takes shape is crucial for investors. We're already seeing in the short term investors taking action, and we can come back to that, I think, later in the discussion. But in the longer term, when it comes to the recovery and what investors are asking for and wanting, it really is that investors want to see a recovery that is sustainable, inclusive, and green. It can't be a return to normal. We need to emerge from this crisis with a plan for an economy and investment that's fit for the 21st century. So in short, we must build back better. And this response needs to be one which takes much greater into account and prioritizes the human relief, the social aspects that so often have been overlooked, whether it's labor standards or human rights, while also setting clear long-term direction and messaging for the business and the investment sector in terms of this commitment to a low carbon transition, and what are the supporting mechanisms that we can have in place to bring in the investment community and the business community to support and lead on this. I realize I'm running over time. There's much more I could say, but I'll stop there and hopefully we can come back to them in the questions as well.
Okay, excellent. Thank you, James. And thank you for making a really good segue for Srikanya to come in from the Government Pension Fund of Thailand. Srikanya, the floor is yours. If you can talk about what is responsible investment for the Government Pension Fund, and what role you think pension funds can play in building back better. Thank you.
Okay, thank you very much for having me today. So in addressing the topic of how government pension fund can do to ensure sustainable recovery from the COVID-19, I would say that we think the COVID-19 is certainly a crisis, but we cannot let that, problems or sustainable development go. So our point of view, our standpoint is we must confront the challenges with care and use the COVID-19 as the opportunity to move forward toward the goals. So what pension fund can do, what we can do, for example, I think the first thing that we can do is we have to strongly state our commitment to invest in responsible, sustainable business. We are strongly and continuously sending messages to the investment world and to our investment peer. This is what Government Pension Fund is going to do. And we are so happy to hear that our message is well received, and a lot of people are following out what to know what we are trying to do. The second point that I like to mention that we are, the first thing is just, the first point is just our commitment. The second point is our action. What are the action to confirm our stand? So I think the COVID-19 actually is an opportunity to drive the big picture for us. We can see what companies are doing responsible business practices and what kind of company are taking care of their human capital, for example. The situation for us is a natural audit of the companies in Thailand. So we can see and we know what kind of company we want to invest. But you know what? As a pension fund, we have to do two things at the same time. We cannot just doing something good for the society, environment alone. We have to also develop kind of a profit for our client as well. So I kind of like the idea of Dr. Ma Chung that he mentioned about the incentive from the government sector. That would be nice, you know, if there is a message from the government is clear and the incentive is there, it is easier for us to convince our stakeholder, our members, our event board members, investment committee to understand why we want to invest in something which would yield long-lasting benefit in the future, but not today return per se. In order to do that, I think government pension fund or investor like us has to have a paradigm shift. We cannot focus only on the return only. That's for shareholding purpose. We have to also focus on at stakeholder, society, environment, and everything like that. And we are leading that kind of thing. Another thing that we can do is, as we are the very large investor in Thailand, what we can do is we can kind of initiate or participate in a decision-making meeting, policy maker, to voice our view. That is something that pension fund is serious about. This is something that we are kind of doing that. But last point that I like to mention is what is the difficulties of doing this kind of thing that we just talked about. I have been in charge of this project, this mission since last year. And I like to tell you that the problem is not to convince people to agree with us. It's not the ideas of doing the sustainable investment is a good idea. Anyone would agree. The issue is how, you know, the problem is how to audit those kind of factors. We're kind of struggling to get the factors to audit companies, to audit business. So when Dr. Ma talking about the idea of raising kind of working group to develop standardized KPI processes, I love the idea. But you know what? But that could be good for, kind of big picture for many companies, but may not be specific for Thailand. So what I like to see, or what we would like to do with the help of whoever, is to develop a local chapter to audit all the factors related to sustainable investment. If we have that benchmark, have the index, whatever it is, the factors that we have to audit, we can release the document to the public and make it official. And all companies in Thailand going to use the same thing. And that would make things easier for us. Otherwise, you know, that's the most difficult thing for us at this moment. If that happened, that would be great. So that would be my last point. My last point is to look forward to cooperation, collaboration, and making a Thailand chapter. That would be great. That would be a good start. Thank you very much.
Okay, thank you. Thank you very much for that intervention. I think what stood out for me on that, Sri Kanya, your intervention is about how the need to localize some of the international developments and the importance of engagement both with your value chain downside the value chain, but also with the policymakers. So with that, I'd like to move to Luan of CIMB in Malaysia. Maybe first, if you can talk about what happened during the COVID lockdown when Bank Negara Malaysia, the central bank, did a lot of good partnership with the banks to support the SMEs and the individuals. And then if you could then move on to say how the international standard, as it were, the Principles for Responsible Banking has helped CIMB or is helping CIMB in the Building Back Better process. So thank you. Over to you, Luan.
Thank you, Yuki. So for those of you who may not have heard of CIMB, we are based in Malaysia, but we are present in all ASEAN countries. We are in about 15 markets, And we've got an asset size of about 130 billion USD. So just a bit of orientation there. We're also one of the founding members of the Principles for Responsible Banking, and we are very invested and committed in this. So to your first question about the partnership between the central bank and the banks and the financial services industry, Bank Negara actually took a very proactive and supportive role once the crisis hit. So there were a lot of things that they had told the banks to do, even automatically. So for example, for individuals, they announced automatic deferment of loan repayments for a number of months, the ability to convert credit card balances into term loans with low interest rates. For SMEs, for example, there's special relief facilities, there are digitalization facilities, micro enterprises facilities. So there are a lot of things out there that Bank Negara has done, and they have also recently announced a suggested SOP for vulnerable groups and how we help these people at the branches. So I think all that is really great. But of course, we don't want to stop at just where the regulators take us, because when we think of ourselves, as a bank, we are both a business as well as a, I guess, financial intermediary and service provider. So of course, as a bank and as any company, you have to look after your employees, things like broadband allowances, protective equipment. For our vendors, for example, we expedited payment terms for all our SME vendors to help them to ease their cash flows. So things like that, just as any company. Now, for our customers, some of the things that we've done, for example, was to launch a bereavement fund to help our customers who had suffered a loss in their families due to COVID, with some cash assistance, financial assistance. We helped our customers to channel, for example, their reward points from their credit cards into these frontline NGOs. We're also looking at how to protect elderly clients from coming into the branches, because they still come into the branch holding their passbooks and they want to update their balance every day. So we're starting to do service calls to these customers to say, hey, you can check your balance just with one click on this thing. You don't have to come in because it's not safe. So there are a lot of things that are happening. It's actually quite good, all the things that we've seen the central bank and the other banks do as well. Now coming to the principles for responsible banking. So there are 6 principles for responsible banking, starting from alignment of strategy to looking at areas of impact to working with customers. Now, the principles for responsible banking are really an overarching compass for what we do in everything that we do. For example, and a lot of people ask, okay, how do these principles jive with all the other things, right? So the principles for responsible banking isn't a different framework. It isn't a guideline. It is the compass of who you are and how you behave. And in a crisis like this, I find that your principles are even more important because your principles will be severely tested. So in our case, we have actually aligned our entire business strategy to sustainability and vice versa. So sustainability is one of the core strategies in our business, and that is unshakable. Now, the second principle is about impact, about creating positive impact, but reducing negative impact. And that still drives us in everything that we do. So how do we reduce negative impacts like carbon footprint, like pollution, but at the same time encourage the positive? And I see a question about how you balance, how do you value something like that? And even in a green business, for example, you may still have negative impact. So you can't kind of discount the negative. So it's always net positive. Of course, working with our customers, that really is our core kind of mandate, because we as a bank, we started 2 years ago, as Yuki said. We started because we got a gentle nudge from our investors. And now we are gently nudging our customers, asking them questions, and to say, this is important to us. And even if we manage to convert 5% of our customers, our corporate customers especially, I would say that's a big win. And finally, from an implementation perspective, the Principles for Responsible Banking has really helped us to stay the course, because we have publicly committed that we're doing this. The pandemic has brought up both the best in people as well as the worst. The people who are trying to say, oh, can we relax this? Can we just close one eye because, businesses are failing? But, so it really provides a compass. And of course, the UNEP FI broader community is really helpful. There's a lot of learning, there's a lot of peer sharing, etc. I guess just the last word on some of the challenges. One of the challenges, because my time's up, that we can't do this alone. As Dr. Marjun said, it's an entire ecosystem. The banks can't do it alone. We need the investors, we need the customers, we need individuals, we need regulators to all come into the picture, and we need the rest of the banks. We need all banks to come in, because if one bank says, I have the standard and nobody else does it, then the customers will just all go to the other banks. So it needs to be a collective action, and I do call on all banks to seriously think about this and accelerate this, in fact, because the opportunity is ripe. Thank you.
Thank you, Luann. And I totally agree that sustainability is not a competitive thing, and that collective action with your competitors is actually really useful here. Thank you. I've got a lot of questions coming from the Q&A about human rights, because this forum is not just about responsible business, but also about human rights. So maybe, first of all, could all the panelists now open their videos so we can have a roundtable discussion? And maybe I'm wondering who can maybe have a go at answering how human rights is integrated into these discussions. Maybe James, would you be able to start?
Yeah, absolutely. So I think maybe taking a step back, and at a high level, when we look at E, S, and G, I think it's probably not unfair to say that the S issues are often considered last. Often the G is that core, which is the first thing that investors will look at as a fundamental, and then depending on the market, it may be under the local circumstances, the industry and sector, E or S may be treated with less importance or less time and resourcing. So I think this is something which is being within the responsible investment industry has been the case, but certainly in the last year or two, I think we're starting to get a lot more recognition and focus on the social aspects, particularly if we're looking at the low carbon transition needing to be a just transition, for example. So starting to think about how the social aspects play into a lot of the bigger trends like the low carbon transition.
Your first...
Oh, apologies. So I think there is a growing recognition there. At the PRI, I would also admit that we haven't focused solely on human rights as much as perhaps we could in the past. We have been working in the last 2 years. We've been very closely involved with the Financial Sector Commission on Modern Slavery and Human Trafficking. And already internally, we've been working on an investor agenda for human rights, which will be put out later this year. So we are working very closely with our signatories, and we fully expect, particularly given the unrest that's happening now around diversity, for example, and the systemic inequalities we can see within the economic systems, this needs to be a part of the recovery. We're saying the recovery needs to be sustainable, green, and inclusive, but also going forward for the responsible investment community, we expect social to become a much bigger part of what investors are looking at, and the issues within that, whether it's diversity, equality, will become a much bigger part of the conversation and something investors need to pay more attention to in the future.
Anyone want to intervene and add to James?
Yeah, I just wanted to reiterate the points made by James on the links between social justice and human rights, and also the environmental challenges we're facing. Because as we all know, a lot of these environmental crises actually affect the most vulnerable groups and the most vulnerable people, and it is a human rights issue as well, actually. So I think it's relevant to both, particularly, I mean, the pandemic crisis has highlighted that issue in particular, the need for all groups to be supported, actually. And one thing also to note in terms of the links between social and environmental justice is the disclosure aspect, because disclosure of information is very important, both for responding to any human rights issues with regards to particular investments, but also on the climate change angle. So I think that all banks and financial institutions need to disclose information where it's relevant to their stakeholders.
Right. Luan, maybe you could touch upon the positive impact and the impact-based approach, which is holistic and not just about environment, but also social aspects and inclusivity and human rights as well.
Yeah, so from a banking perspective, we do this on two fronts. So first is what the businesses and people that we support and how we include the more vulnerable sectors, well, more vulnerable individuals mostly. But secondly, it's also about who we lend to and how they treat their stakeholders. So we do that on two fronts. You know, as I said, we started not too long ago, but we are gradually kind of increasing the depth of human rights due diligence that we do in our lending decisions.
Okay, thank you, Luan. And Srikanya, maybe Thailand is quite advanced on human rights issues. Has GPF included human rights as part of the environmental and social ESG assessments?
Yeah, actually, you know, from this year, we start to pay strong attention to human rights next to ESG. ESG, we kind of understand what it's all about and how to handle that. But human rights is a new challenge. And we have done a lot of study on human rights integration into investment process. And unfortunately, not so many people talk about it. We found one paper from Australia Pension Fund talking about how we can integrate human rights into investment. So I think we start from there. And in terms of how we're going to do it, we want to do two things from after the COVID, after we can see the company. The direct engagement is very important. We have to do direct engagement, talk to company, talk to executive, how they handle their staff. That they think that's the key human right that they have to pay attention to. And the other people is the people living around their entity, industry, for example, how they handle that. That's the kind of thing that is strong focus from GPF from right now, from this year onward. Thank you.
Okay, thank you. Which is very interesting, and it's directed at CIMB, Luan, but I think other speakers can also participate because it's quite an interesting one. So there's a speaker anonymous that says that, can you explain the tension between the business case argument that is inherent advantage for investors, banks, everyone from green sustainable finance on the one hand, and then on the other where you say that if one bank doesn't follow responsible banking, that they have a advantage with the bad guys, as it were, that they will go to the easier bank. So I guess what we're saying is that Helena was speaking about how, you know, responsible and green activities were and are quite strong, performing quite strongly under COVID and the current crisis. But then on the other hand, you mentioned about the difficulties, the challenges that CIMB face as a leader in responsible banking in this region. So maybe a little bit more about that.
Yeah, thanks, Yuki. That is actually a really good question. I think, you know, it's all about the difference in your compass and whether you're taking a short-term view or a long-term view. So let's just put it in a completely different situation, an analogy, right? So let's say there's a shop and there's no security guard and the shopkeeper has gone to the bathroom, right? So you're in the shop. So you know that, hey, there's no CCTV. Nobody's gonna stop you if you just take this pack of sweets. Do you do it, right? So it'll be silly if you don't do it because, hey, somebody else will take all the stuff and they'll get stuff for free. But then in the long term, where does that leave you? In a security situation, in a social situation where there's no trust, where does that leave the economy? So, you know, so there is no right answer to this. But I think as most human beings, and I agree, for the business side, it's a bit harder because they keep thinking about quarterly P&Ls. But on an individual, from an individual perspective, you know what is right and what is not so right, even though you may not want to admit it in the boardroom or in the business, right? So yeah, so do you do the right thing, or do you just go and take that pack of sweets? So
Great,
think
great
just
answer.
to add into
Yeah,
this,
James,
I
please.
think it's really important that we're starting to see a lot more transparency and accountability and calls for that, obviously across, you know, for the financial sector, whether it's banking, insurance, investors. And this comes in when we talk about kind of the active ownership and engagement side. So making sure that investors are engaging along with the commitments they've made, for example, for climate change policies. But more broadly, this accountability, I think, can help restore some trust within the, you know, within the financial community, and obviously holds the feet, you know, the feet to the fire. So it helps give, I think, further support to those leaders who are starting to really move forward on this, and those laggards who, or ones who are doing this in a piecemeal way, it very much highlights them and calls them out. And I think these aspects is having, whether it's civil society, the media, etc., putting more attention and review on this can only further, I think, drive ambition and provide greater, you know, catches us against those who may pretend to do this without a real ambition, or are taking the dirty route and not making any commitment at all.
Great answer. I totally agree. I think Dr. Marjun was also saying about how the regulators will be increasingly looking at mandatory reporting and increasing the transparency, because it is such a powerful and an important tool, especially for investors. And Srikanya, you were also talking about how you needed more information from the companies that you invest in. So maybe a little bit from you, if you have any comment to add. Okay, Helena, do you want to chip in here?
Yeah, just to sort of chip in on this issue of the business case as well. I think there's, like Luan said, it is also related to transparency, but I think we can see that some clients and some customers do have a preference for institutions that have the higher ESG requirements as well, where they know that that information is available. So I think it's a bit of both sides, actually. And we can see a lot of, you know, clients sort of pushing their institutions to improve their ESG as well. So it's, yeah, it's a bit of both sides, I would say, on the push and the pull side. And also investors as well. A lot of investors, you know, want to invest in the more sustainable stocks with the highest ESG criteria. They might also get, you know, increased security in the long term that the investments are going to perform. So
okay, thank you. Yeah.
Just to add on this, and I think it's really interesting, you know, Kanya mentioned, you know, in Thailand, they're still having this issue around accessing data. Yet with the stock exchange of Thailand, they're actually the highest ranked exchange in APAC in terms of their approach to sustainability disclosure. And so I think that, that's a very interesting play where even in Thailand, where we've seen them really being a leader here, this is still, and I think across Asia and at a global level, access to comparable historical ESG data is still the biggest or one of the biggest barriers for responsible investors. And part of this we're seeing, improved moves on disclosures will help, but there is a responsibility for investors. And this is something I think we're falling down on, is they need to be engaging with these companies, having a dialogue around what information is important, why it's important, how it's being used, so that the companies have a real understanding, and it will help them to buy into the sustainability mindset if they have a better understanding of why and how investors care about this information. And I think that's not, that's globally, but particularly in Asia, I think we're lacking that dialogue.
Yeah, I think data collection and uniform information is still an issue that we need to discuss. And I think what Srikanya, you were saying earlier about green taxonomy, and a local chapter in, measuring and evaluating corporate performance is really useful. So we need, I think internationally, we have a growing number of methodologies now, like the NGFS, which is the forward-looking climate analysis on that is still very difficult and not so widespread in this region. But a lot of the regulators are starting to look at this, including some of the regulators in this part of the world, in Asia. So we are seeing that kind of, very difficult methodologies now being developed. At the same time, I think we still have to resolve some of the more easier questions as well. I think there are still a lot of low-hanging fruit that Thailand or Malaysia and other countries could do, and maybe starting with green taxonomy or having some a common understanding of what is green, what is brown, what is a transition from brown to green could be quite helpful. Yeah. Okay, thank you. Maybe then we still have a bit of time to go through some other questions. So maybe just to go into further about engagement with stakeholders like clients and investee companies. How difficult do you think it is going to be when it's under an economic recession like we are already in at the moment? Would it be more difficult for your clients to think about the long-term survival when their short-term survival is so risky at the moment? Would they be able to think, outside the box and make this the opportunity to re-strategize their business? How is your tourism sector clients going to be thinking about their long-term survival, and how can CIMB or GPF help in building back better? So maybe starting with Luan, if you have any engagements already with your clients and maybe some of the strategies that you've been discussing in your bank about this.
Yeah, so absolutely. I mean, if you are thinking about where your next meal is going to come from, or if you're thinking about how you're going to pay next month's payroll, then absolutely, you may not want to go and say, hey, can you put in place, an environmental policy, because then, it's just, but, but for many other clients, I mean, so there are a segment of clients and not small, but who are there. But for many others, what has become very clear now is that resilience and sustainability is not something that is 50 years from now, is not something that happens to somebody else in a different continent, and it's not something that will be, ooh, gentle warming of the climate. Because people now realize that, wow, this is how bad it can be. And something that appears to be a health crisis can then turn into an economic crisis, which then becomes widespread. So they can now start seeing all the knock-on effects. And I think that, well, I think that that's an opportunity for us to then go to them and say, look, you know, this is a dress rehearsal for later on. And you know, on our side, we're stepping up our engagements, of course, remotely and at a low cost. But we are not backing down on that because now is the time. So yeah.
Yeah, absolutely. Thank you. Anything to add from the other panelists?
Yes, so James here. Maybe I can talk a little bit to how the PRI has been engaging with our signatories, you know, through the COVID crisis and how they've been responding to this. So I think many organizations like the PRI, UNEP-FI, who are in this space have really been ramping up their engagement, not only with our members, but also with the wider stakeholders who are involved in this. And I think, as everyone has emphasized, collaboration at this time is going to be critical going forward. You know, we've seen groups of investors demonstrate leadership. So we've seen an investor statement on COVID response signed by over 300 institutional investors. We've seen a global statement on sustainable recovery by the PRI and a number of other organizations part of the investor agenda. So really sending these strong signals of the importance of a sustainable recovery. I think that's critical, and a lot of institutional investors who haven't lent their voice can get involved with this. It's a very easy thing to do to show your support for this alignment. But within the PRI, we've set up a number of internal engagement groups to try and facilitate and have that discussion around what steps and actions it can take. And the PRI recommended 7 immediate actions. And really, these are all around kind of engaging with companies. So around their crisis management, reprioritizing engagements on other topics so that you're really focusing on the now, participating in virtual AGMs where that's possible, publicly supporting an economy-wide response. So all of these are actions that investors can take, and I'd encourage anyone who's interested, you can visit the PRI website to find out a lot more on this. But really, in the short term, for us, the overall message has been deal with the now, prioritize staff, suppliers, supply chains, but companies at the same time need to keep an eye on the long term. And then obviously in terms of the longer term, it's critical for investors that we see a recovery which is green, sustainable, and inclusive. And institutional investors have a role, and I think a responsibility to call for that as well. And we're seeing a lot of investors collaboratively do that, but separately do that as well. And I think that's very important.
Right. Yeah. Thank you. So balancing the short term, but also now increasingly needing to address the long term to build the resilience. Yeah, that's a really good point. Anything that, Helena, you want to add? I see you, no, nothing from your side? Okay, we have to wrap up in about under 10 minutes. So I'm thinking of trying to have some conclusions, which has been a really fantastic session for me, and I hope the audience has enjoyed it as well. We have had a lot of questions in the Q&A that we haven't been able to address. There is maybe for the closing remarks, if the speakers can fit in a one last question, which is about phasing out or divesting from coal. So that the question is saying that when you are divesting or moving out of financing from coal, that might create joblessness in the community. So how do you balance the E and S when you are trying to make a shift in the economy like this. So as a last closing remark, if you can fit that in, anyone?
I'm happy to say a few words on this. Yes, I think it's important to actually create jobs in this investments that we are investing in now as part of the recovery. And a just transition is very important also for the workers that may lose their jobs. But I'd just like to reiterate a point made by Marjan actually about the long-termness of, for especially infrastructure investments. And actually it won't be in the interests of the workers either to invest in the fossil fuel based economy, because in a sense, if those investments carry on in the fossil fuel infrastructure, those workers will only lose their jobs later down the line in any case. So that's why it's better for everybody, including workers, that we absolutely just invest in clean infrastructure. And that's very important in terms of resilience and jobs.
Okay, great, thank you. Anyone to add on that one? I guess, yeah, like Dr. Marjan said, now is when the liquidity is abundant from the regulators, and so it is an important time to consider where the money is going. And as Helena was saying, once you lock it down, it's going to be hard for us to reverse it. So this is the time to make good decisions and not go back to business as usual. Srikanya, do you want to say any last words? Oh, you are muted at the moment.
So as I said, as an investor, we don't have any difficulty in understanding the ideas of sustainable investment. We understand and we want to do it. The difficulty is how to do it, how to do it in practical, how do I get our investment team to integrate the factors into their investment process? How can we integrate that with our investment, value chain? That's a kind of a time-consuming job. There's a hard work on that. There's a lot here to do. So if we can have, like I said, Thailand chapter, Thailand standard, that would be nice. That's something we want to make it happen. We want to lead this issue actually. Thank you.
Great that the government pension fund is leading that because I think that practical methods and standards are really important. Luann, any last words from you?
Yeah, so I'm full of analogies today. So talking about coal, if you were working 30 years ago, you would have known that there are these huge typist pools who did nothing but type written things and type them out. Do we have them today? We could have said 30 years ago, no, let's keep them paid although they don't do anything because they're going to lose their jobs. Yeah, you can do that for a year, 2 years, 10 years, but you can't do that forever. So I think, I don't even know what to say, but yes, so it just doesn't make sense eventually. But also from the banking perspective, as Dr. Marjan said, and that statistic that he gave just now, 20% potential NPLs on coals. So that, from a banking perspective, is the key thing that we should be looking at. The problem is they're all very highly theoretical models for now and pretty long term. But if we can get good projections on those, then that will really wake people up, because one bad loan can wipe out 100. Yeah. Last words to all practitioners, everybody: do not slow down. Do not slow down. The pandemic has set us back a year at minimum, 2 years, 3 years. We need, in fact, to accelerate to catch up, to get back to even where we were. And there are plenty of excuses, plenty of reasons of why we can't. But if you're going to wait for others to do, then it will never happen. So just don't wait. Do what you can, and work together to overcome those obstacles.
Excellent. Thank you for those inspiring words. And not to forget that, even if there are closing and declining sectors, there will be new jobs from the green transition as well. So I just want to end by sharing my last slide with you, which hopefully I can show you. Tomorrow, so there's been a lot of questions from the participants about human rights, and we will be holding a workshop on banking and human rights for the ASEAN banks tomorrow at 14 o'clock Bangkok time. So if you are interested in knowing more about banking and human rights, please do register through the website. It is an invite-only event, and we may not be able to accept all interested registrations, but you will hear from us if you are accepted. So please, please join us for this tomorrow as well. So with that, unfortunately, we have to conclude the session, and I'd like to say a big thanks to all our speakers today. It's been wonderful having you and sharing your experience. And while we have little hiccups on virtual meetings, I think it's gone really well. And we hope that the UN can continue more virtual meetings in the coming years as well. So with this, thank you very much to the participants and to the speakers. And we say goodbye for now. Thank you.
Great. Thank you, Yuki. Thank you, everyone.
Thank you. Bye-bye.